Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair, and this week, a market update.
So it's been a while since we filmed in the office. Mike, since we last filmed in the office, interest rates have moved, petrol prices are out of control, so we thought we'd jump on here quickly with a quick podcast talking about what we see happening, what's going on. So Mike, what is happening?
Yeah, so she's a bit rocky out there in the world at the moment. Russia's invading Ukraine, commodity prices are going through the roof, inflation is spiraling, I won't say out of control, but it's definitely getting up there. And all of this makes for a recipe that central banks have to try and solve. Now, the main way that they do that is through the official cash rate in New Zealand. So at the moment, that is on the way up.
Yeah, so this is what this podcast is all about. If you've got your mortgage coming up for renewal soon, you're thinking about how is it going to impact you, that's what we're doing today. So Mike, let's take a step back. Every time you turn on the news, inflation, you're looking at petrol prices,
Yep.
Cucumbers are $11 a go, what's going on there?
Yep.
So why is the cost of everything going up?
Yeah, so there's a couple of reasons for that. The first one is what we call a demand side or pull inflation, which is as money is pumped into economies, people tend to spend more and buy more. The second part of that is a supply side shock. Now, that's what we've seen more recently with the impact of COVID on supply chains, and now more recently again with the impact of the war in Russia, as Russia and the Ukraine are both really big producers of grains, oils, all that sort of primary goods and that sort of thing. Both of those combined mean that people are demanding more and the supply is less, means that the price of things is going to increase. That is why you're seeing oil going up, cucumbers going up, all of these things going up because of one big connected supply chain.
Oil and cucumbers, that's what life is about.
Ain't it just?
I was really surprised to see, I watched a video the other week, seeing how much Ukraine produces as a country. I mean, apart from it being a horrible thing on a global stage that is impacting a lot of people's lives,
Yeah.
from a production and a supply perspective, no wonder there's a shortage of so many different things, because a big chunk of world supply on a global scale between Russia and Ukraine is missing at the moment, right?
Yeah, absolutely. And just remember that Russia's also a really large producer of natural gas and oil. Some of those things have been carved out of the sanctions that have been levied against them. However, because of the trade restrictions, because they have been frozen out of the global banking system, it's hard to buy those commodities and effectively the factors of production that you need, which will force prices up across the world. So inflation is going up. But how does that necessarily mean higher interest rates? Well, the Reserve Bank of New Zealand has a mandate or a target to keep inflation between 1% and 3%. I think recently we saw it somewhere up around 7% for a quarter, maybe a little bit more.
The other interesting thing on that point as well is there's a few views that the reported inflation rate and the actual impact in some areas are vastly different in terms of the real inflation rate.
So your real inflation versus the reported inflation is just about the mix of, products that you have in that basket when you are measuring inflation. So anyway, inflation is going up. The Reserve Bank has to get it in check. So one of the major tools that they use to do that is the official cash rate. Now, the official cash rate is effectively the wholesale interest rate that the Reserve Bank of New Zealand charges retail banks. Retail banks are who we get our mortgages from and that sort of thing. As they increase that rate, it means that banks will increase their retail mortgage rates, which means that people in the economy have less to spend. If I'm spending more of my paycheck on my interest on my mortgage, and remember most of your average middle-aged person has a mortgage, if I'm spending more of my paycheck on that interest, it means I have less to spend in the economy. That sounds like a bad thing for the economy, and it is in a way. But remember when I said at the start that one of the major causes of inflation was the demand side pull, and that is people having more money in the economy, buying more goods. As the official cash rate rise, they spend more money on their mortgages, they have less money to buy goods. It should smooth out some of that inflation.
So quite simply, I have less money for my avocado on toast going away over the weekend with my friends because I've got to spend the money on my mortgage.
We've been through this 1,000 times. You never pay for avocado on toast at breakfast, so this won't impact you at all. It will impact me because I pay for your breakfast, but yes.
I have a lifestyle that you have to keep me accustomed to, Michael.
Don't you just?
So, okay, so you've explained inflation, what's going on, why it's happening. What is the Reserve Bank doing at the moment?
Yeah, so they've recently risen the reserve, the official cash rate from 0.75 to 1%. Predictions are that it could go as high as 3%, but economists predict a lot of things, and economists can't predict the future at all. We've got some from Milford Asset Management saying that actually this is where they're peaked and they're going to stabilise and drop in the future. Everyone else seems to think they're going to be going up a lot more. So effectively, what does that mean you should do? Probably look to fix over the medium, maybe the long term if you're that way inclined.
So Mike, say like interest rate, the OCR goes to 3%.
Yep.
For your retail punter, for lack of a better term, what does that mean in terms of how high rates might go?
Well, you're starting to get above sort of 6% rates on average there. And for your average punter, actually, let's look at a more specific example. If rates get above 5%, then the prediction is that sort of 20% of first home buyers that are going to have serviceability issues, meaning they can't afford the repayments on their existing mortgages. So hopefully that just gives you a little impact on what that could sort of mean for your average person in the economy.
Okay, so what you're saying essentially is that people should be looking to fix their rates. I think, was it Kiwi Bank had a 6.99 for 5 years or something come out? That's pretty crazy.
Yeah, look, again, have a good chat to your mortgage broker, to your banker about what fits your situation best. But a lot of people are breaking and fixing at the moment, or just looking at those medium to long-term fixes, so above the 2-year rates at 2s, 3s, 4s.
And if people have fixed mortgages for like another year, I know it'll depend and they should have a chat, but are you advising any people to break their mortgages at the moment and refix for longer periods of time?
Some people, yes. Some people, no. Some people are on those sugar high rates of like 2.19, 2.75, those sorts of things. In those instances, sometimes it's actually better to just hold on to the rate and take the hit later.
It's kind of crazy that some people could go off from 2%, roll on to like a 6% interest rate,
Yeah,
right?
I know.
Yeah. Is there anything you want to touch on before we wrap up, Mike?
No, look, I think once again, it just comes down to communication with your broker or your banker about your rates and what is best for you. You should be having these discussions, making sure they're in depth, and then making the adjustments as soon as possible so that you're not paying too much interest over time.
The other really important thing to keep in mind, which I've been seeing, and I'm sure you've been seeing as well, Mike, is there is a lot of clickbait out there. Interest rates getting to 10% by the end of the year. You've got to break your mortgage and refix it, and inflation is going to rise to whatever. You've got to remember that a lot of this is just opinions trying to get clickbait. Before you panic and go and make a decision, go and talk to a professional so they can talk to you about what is actually happening in the market and what is right for you.
Yep.
We'll wrap it up there. Thank you very much for joining. Make sure to give us a review, give us a subscribe, and we'll see you next week.
Cheers.